Top of the morning to you traders. Welcome to the Flow Show. It's Tuesday. The Yanks are back from their day off and the markets are responding as we've seen this morning. Morning to, who's here? Kay and Stel?
I don't see Stelios. Good morning, Ryan. Good morning, everybody. He might pop in a little later.
Yep, hopefully he'll you say, pop in and share his wisdom with us. So let's get stuck straight into it. Starting with the RBA, they hiked as expected yesterday, 50 pips. I was keeping an eye out in case there were comments following the RBNZ, similar theme of potentially slowing down hikes in the future. Not the case for the RBA. They're going to keep on raising rates, but added they're not on a preset path. They don't see the full effects of hikes being felt in mortgage payments as yet, so they're looking to keep the ball rolling there as far as their hike path goes. Not really anything else major from them. First thing I want to do, I think I need to correct something I said yesterday. I think when we're talking about the RBA, I might have said that they had 2 quarters of poor unemployment numbers. That wasn't the case. I meant retails. Which I did remark upon, that the consumer is perhaps looking a little bit wobbly yesterday, so I just wanted to correct that. Kay, you got anything from the RBA or just anything?
No, I mean, what's gradually coming through from the central banks is they still on their rate hike path, but they all seem to be going a little more data depending, preparing us for possibly putting on a break or a pause or whatever they want to do come the next meeting. So it's I think that's what the market took from it as well, because we have seen the jump on the initial hike. But then Aussie very quickly settled down and is actually trading not too far from the day's lows versus dollar. On the cross side as well, things versus like the euro, for instance, came back with a bit of a vengeance. The sterling Aussie is trading on the highs of the day. So yeah, these lines about going whatever happens next dependent is probably having investors like raising a little bit the antennas and saying like, well, perhaps we should be a little bit careful in blindly buying stuff that where the central banks are hiking. So apart from that, yeah, they're basically all running on the same ish scheme, those who have a dollar in their name.
Yeah, and that was something I was going to mention as well regarding other central banks. This was from the Polish PM, not the central bank itself, but he said that the cycle of rate hikes in Poland may be coming to an end. And just to highlight that situation there, as you can see, these guys have been hiking quite significantly since October. They're all the way up. Their last hike at 6.5%. So to say their hike cycle is coming to an end is probably par for the course from what we're going to see from others. You know, big hikes there. It's where everyone else is going to get to before they start slowing down hikes, which, as I mentioned yesterday and previous days, it's all about where rates will go to as opposed to the increments they get there at. So Poland PM saying that the hike cycle may be at an end, rates going from 0.1% to 6.5% in just under a year. You know, we've seen this in other central banks and countries too, raising quite significantly higher than other major central banks. So anyway, moving on, the PBOC, they finally fixed the one above 6.90 at 6.9096. Expectations were 6.93 odd. So they're now seemingly letting it go a bit more above that 6.9 area, but they're going to keep a firm leash on this, I expect. I don't think we're going to see them letting this go too far. They're going to keep these fixes fairly tight to try and keep a leash on one weakness. Bit of inflation coming into China as well. They've said they're going to raise the retail fuel prices on Wednesday. They're in big control over that. So inflation coming to China potentially at a time when they're suffering due to the drought, weather, energy, and falling economy and the virus. So a bit of similar situation to everywhere else, but they are one of the only major central banks who are actively easing policy in certain parts to try and cope with economic weakness. Japan was out, the finance ministry, namely the head man Suzuki, was out with some comments overnight, still sticking to the high sense of urgency regarding the moves, but he did say that he has the impression that FX moves are getting bigger. Whether he's taking the summer effect into account there, I don't know, or maybe he's seeing something we're not. But still staying on the high sense of urgency. We're not getting any speculative comments coming in that we did previously. So we still remain at that warning level for that. But I've been thinking about something as well, and it sort of triggered from what Kay said yesterday about one of the business lobbies speaking up about the level of the yen. And I know we've been saying for a long while what the usual playbook is, or the old playbook is for the Bank of Japan, in that they look for excessive volatility in these moves. You know, what it's doing now is not excessive volatility. If it starts moving 200-300 pips in a session in a day, that's getting to excessive volatility. And also, as mentioned, if they start talking about high speculation or excessive speculation in markets, that has been the old triggers for when they might intervene. But as I say, what Kay mentioned yesterday got me thinking that perhaps we need not to put too much faith in in history and what they did previously. Maybe if we start to get further comments from businesses and firms who are starting to suffer or are going to suffer from the level of the yen, that may tip the hand a bit more on, you know, what the Bank of Japan does or what the Ministry of Finance does. So as I say, we learn from what they did previously, but as the old investing thing goes, prior results are no reflection of what may happen in the future. And I know we touched on it yesterday as well, but I'm just thinking that might come into play a bit more the higher the level goes in the end. What do you reckon, Kay? Could it be different this time if they intervene? Could it be for different reasons?
That's always what we are on the outlook for, right? Changes in what may happen. It's a bit well, not strange, but the correlations are also changing from day to day, where we have seen the yen go on its own, and then mainly driven by what's happening in the US 10s, and then what's happening on oil and commodities, since they are still very big importers. Now they seem on the same path as the CNH. So, if I may, a quick word on this on the CNH, mainly the fact that PBOC fixed above 690 was the first. Well, the investors or the speculators took it as a green light to take dollar China closer up to 7, which they did in the first instance. And then it was only then one line about hiking the fuel prices that took it from 695s to 697 straight away. So yeah, the market is still very bearish on the CNH, and it seems that they're putting like the yen in the same basket now. It's like dollar Asia, you know, and they say like, oh, okay, we still have got big divergences in central banks, so let's just continue to sell yen, continue to sell CNH is the path of the least resistance. But indeed, when Keidan Ren, which is the biggest business lobby, starts to cough, perhaps we are going to see a bit more coming out of the officials. They are no officials, but they are very closely linked to whatever goes on in official dom over there. So yeah, today we're also getting close to big levels, which we will have a look at later. But I've closed what I've had longs because we did 150 odd pips from the low from the 140 1/4, and we're trading 141 3/4. And I'd argue it's the speed or the volatility. They talk about volatility, but when they talk about volatility, it's we have to understand they just mean one direction volatility, right? If dollar yen would drop 500 points in a day, they would not intervene from here. If it would rise another 200-300 points, then likely we will see at least heightened rhetoric. So far it was a little bit like yeah, we're moving in line with fundamentals. But when we start to move away from fundamentals as well, that I would like to add, that would, in my opinion, speed up the risk or heighten the risk of interventions. Like, for instance, we've seen crude come back quite a bit. We're trading around 87 bucks now, yet the yen is just continuing to weaken. So yeah, we have to only the US 10s now correlation is still working. We know that the correlation with risk on, risk off in equities has gone out of the window in March end of March this year. But I'm starting to be a little cautious, though. I mean, if you look at the global picture, there is absolutely no reason to buy yen. So I'm not going to buy yen, but I'm starting to be a little cautious. So perhaps what I'm going to do, if I'm still buying dollar yen on dips, is going to be a bit more fast in taking profits than just sit back, close my eyes, and wait for higher levels. So yeah, that joins a bit what you're saying, that we don't know if the old playbook is still going to be the one that they will follow. But at least if they ever talk about speculation, like Kedan Ren was hinting at, then we should be very careful.
Yeah, definitely, mate. Right, I'm going to move over to the UK. Liz Truss got herself in the hot seat for Prime Minister, as I assume you all know. She's already opening up the purse strings and trotting out the fiscal cash truck. One of her first moves is apparently to spend or use a price freeze to the tune of around £130 billion, and also £40 billion for an energy aid package for businesses. So she's coming out guns blazing, really, with the fiscal measures, which was largely expected. Now, some in the market may see that as sterling positive in terms of the UK doing something. But really, I always look at the other side. If they're going to be spending 130, 170, 200 billion just to stand still on something like energy prices, you know, not to make a meaningful long-term impact on it, just to stand still, that's going to be paid for somewhere else. And that's the part we don't hear about as much. Where that money is going to come from. Is it going to come from debt? Increased debt, obviously, in a higher interest rate environment means it's going to cost more to settle that debt, more expensive. You've got to find the money for that as well. And also who and where are they going to get that money from? Likely in taxes on the other side. Is it going to be a windfall tax on energy firms? You know, how is it all going to be paid for? So although some of the markets may be seeing it as sterling positive in terms of her trotting out the cash, it's how it's going to be paid for that's going to be important. But also, we've been having a discussion in the chat room as well regarding Truss, and you know, a lot of people are seeing positives in this, which may be so. She's coming out obviously with a lot of strong rhetoric about how she's going to improve growth and, you know, cause a little bit of a boom, or try to affect a bit of a boom, get out the rut that the UK and the rest of the world is, which is obviously, you know, extremely hard to do in a global sense when everyone is going the same way. But what I would say is that regarding a fiscal response from the UK, we can obviously move a lot quicker and a lot faster than some countries. And that predominantly includes the Eurozone, who, as we know, or Europe in general, as we know, move very slow. They may come up with all these wonderful ideas, but it takes years to get them into place. Just look at the EU rescue funds and how long that took to assemble and get out the door. And I still think a lot of it hasn't even been touched yet. So if you're looking from an investor's point of view about who may have a strong chance of pulling themselves out of, let's call it a nosedive, economic nosedive at the moment, the UK may well be one of those ones who can at least give a shallower fall, if you like. We may become one of the less dirty shirts alongside the US, maybe not to that level, but we can move faster than some of the other countries and areas, which can therefore be a boon for something like the pound and investors who think that maybe the UK won't be as bad as everyone else. So that's something to keep an eye on. We are going to get a lot of noise from her, all the great things she's going to do. Those are going to get picked apart and shot down, A, by the opposition, B, by the analysts and the press and whatever. So we need to see over the next couple of days what the plans are going to be, how they're going to be paid for. Is it going to be market positive before we can really understand what Liz Truss means for the pound, at least. Right, onto the ECB in a blackout period, but we've had a squad of ECB bods in the Eurofight magazine interviews, which I think, how many pages, Kay? 301 pages of...
yeah, about 300 pages. If you don't know what to do over lunch or so, I may have a read.
Yeah, so they came out with a ton of comments regarding that, and you guys can see that the link to all the interviews are in our news and research room on the platform. I'll show you that there quickly. So this is part of our chat room where we do put a lot of news and bank articles, just things you can catch up on that don't get lost in the main chat room. You can come in the morning. I use it a lot. I know a lot of traders use it a lot. If you come in the morning or been away from your desk, you can look in there, see if there's been any important news or announcements, and the interviews there from the ECB bods, you can catch up on there. Nothing really too shocking from them. No real big monetary policy chatter. But it's strange that these interviews have come out a couple of days before the ECB meeting. As I say, we're in the blackout period where they're not supposed to talk about monetary policy, but the comments have been really loose regarding that, but nothing overly hawkish. We had Kestrel Kazaks, as I like to call him, who's usually one of the biggest hawks, but he was saying that a protracted recession would potentially slow rate hikes, and some of the others are warning on these recession worries, and you know how rates may not go up as hard and fast as some might expect, that sort of thing. So not overly hawkish. I wouldn't say dovish, but maybe there's a little bit of gamesmanship here in that they've dropped these comments and these interviews out just to maybe take some steam out of expectations going into the ECB. Of course, we've had the ramping up in 75 pip expectations going on there. I'm not saying these have been designed to pull those down significantly or signal that it's not going to be 75, but what the ECB often do is they don't like to let market expectations run too far ahead, so they may just be dampening down a bit of that. Anything you picked from those comments, Kay?
I'm sorry, I was just reading something on comments on what on the
ECB squad coming out.
No, not really. And I also think the interviews might have been taken last week, and the magazine only published today. You know, I don't think there's going to be any finger slapping there from Lagarde. Yeah, and as you say, it was a bit neutral to, well, let's say that there were more of the doves in there than we heard from the Hawks earlier. Yeah, Kazakhs, it didn't really screw back, but yeah, it did say that broad protracted recession could slow rate hikes, but I'm not even sure it was him or Stornaras who was still hinting at that. But yeah, I wouldn't read too much into it. Well, I'm not going to personally.
Yeah, cool, mate. And Gavin's just put up a headline now where there's margin calls being seen totaling at least $1.5 trillion in European energy markets, unless governments step in with some liquidity. It's becoming a big mess, and we continue to see the headlines coming out, the gamesmanship and the game of chicken coming from Russia via Europe. Russia have said that they are looking to export 20% more electricity to China, which will be welcomed by China, facing shutdowns and the like over electricity worries there. And the Russian energy minister said they will respond to price caps by shipping more oil to Asia. So again, circumventing all the sanctions by going out the back door to countries who are happy to buy oil from them at a discount. But we've also had Gazprom coming out and telling Siemens to fix the faulty equipment because that's what's needed to get the Nord Stream machine or turbines back up and running and flowing again. But this is also coming amid Russia saying that sanctions are the reason why Nord Stream has stopped, and until those are lifted, it's likely to stay stopped. So there's still these big issues in energy markets, and one thing, a growing fear that I've got right now is that everything we're hearing, from von der Leyen, from Macron, is to do with energy storage and how they're building up their energy storage for winter, that they're all going to be comfortable over winter. If Russia turns off the taps now, it's not winter we have to worry about. It's what happens after winter when storage is depleted and there's still no gas flows. And it just, I don't know if it's a bit of smoke and mirrors on the part of the government, not wanting to worry people, but when no one's looking that far forward. Everyone's looking at winter and storage now. So I'm getting a little bit fearful of what we may be entering into come the new year, come spring, if this situation isn't resolved, if countries over this side of the pond haven't secured other sources of energy, not to mention what the costs will be involved in all that anyway. But that's just something that struck me, that we're not hearing about what happens after winter. And we've been saying prior to this months ago that countries were being a bit quiet on getting their storage up to speed. Now they're all rushing around like blue-ass flies, and as soon as we get the headlines that they're up to 80% and ahead of targets, Russia switches the taps off. So really, for me, the big worry is, as I say, after winter, what comes next from there. That's all the main headlines I've got. Kay, you got any other bits and bobs you want to share or you've seen?
Not really. This I think what's been more typical is that on a quiet US day, rates have been moving around quite a lot. The market. It might have been a liquidity issue, but the markets haven't stood still. So yeah, it's been more a case of the market managing positions, in my opinion, than really headline news driving the whole thing. Of course, yeah, I fully agree with you on the European energy situation. We are by no means out of the woods, really.
Yeah, and Albert's just put a question there. If Russia diverts,
very dangerous to assume that Europe is out of the woods when they are at 80% of their storage capacity, because whatever they need, they will have to pay a much higher price for it once they will have their pipes or deliveries in place with other countries. I'm thinking about Canada, and there's still a risk overhanging as well that Norway will be closing the taps at one stage because they need oil and gas for their own market when the winter will strike over there. So yeah, by no means out of the woods in Europe regarding energy, I think.
Yeah, definitely. And I'll just mention that Albert said if Russia diverts oil to Asia, doesn't that reduce demand on Saudi oil, which can be diverted to the West? it's not really oil that's the issue in this circumstance. It's gas. You know, Europe can get its oil from the Middle East. US, there's more supply lines on that than there is for gas, say from the US to Europe. So this is purely a gas situation I'm talking about here. But Russia, you know, we've heard about Russia. They may, if Iran comes back with his nuclear deal and that's all good, they get to come back into the oil market. Russia can then circumvent sanctions by selling oil to Iran. Iran uses that oil domestically and sells their own oil out elsewhere. So, you know, yeah, that there's going to be lots of that sort of stuff, and there's plenty of that sort of stuff going on at the moment. But in this situation, it is purely gas that I'm talking about. Well, the first pair I wanted to look at, let's go down to this one because I've done a separate one. I wanted to take a big look, because I haven't done so for a while, at dollar yen, a real wide look, just to see what sort of levels we're coming up against. We've got this long touted area around, you know, the 147s, those highs going back to 98. That's obviously the next big level that we've got coming up, technically, for me anyway. But we have got some big fib levels coming in. Now I've done 2 fibs here. Ideally, the blue one I'm more going to be following, because that's the definitive swing low, as opposed to this one back in 82. But because this is a monthly chart and there is, you know, plenty of time gone past here, I have fibbed that as well, just for some potential technical levels to keep an eye on. Now, I often look at the big wider charts just to get an idea of what we're looking at. Now, if you look at this chart, you know, we are pretty much staying well below the 38.2 fibs on either. So on a multi-year view, it shows you that we do have some scope if we get some higher breaks up. I mean, you know, these talking, you know, 176s, near 180s, just to get to the 50 fib. Now, obviously, that's not going to go in a straight line. If it does, that'll be quite shocking, and no doubt we'll have all sorts of stuff coming out of Japan. But as I say, it shows the scope that, you know, in a multi-year sense, you know, this move isn't that big at all compared to what we've seen historically, and that it could have further legs. Even getting up to 150, that'll be a big test, getting up to those fibs and those sort of areas. Now, I know a few people, and Kate particularly, and he'll probably show this, use extensions just to gauge the moves from here on, because there can be a bit of empty space on the tech when you look at these multi-year moves. And I'll let him come in with that in a bit. But just for me, I just need to get a sense of where the bigger levels are, the bigger long-term levels. You know, 160 up here against that high there, that's something to keep an eye on. It just gives you a picture. You can start planning in your head where you're going to be looking at. Then you can come down the time frames, plot the smaller levels or the more intraday levels, just to see where the main support and resistance will come in for that. So that's just a big overview of dollar yen there. Euro dollar, just looking at that, as we've been speaking about the last few days, you know, its inability to break down through 99. We had the fake out yesterday evening. I was at 99.99% certain we were getting a break of 99 yesterday. You know, I traded it, but it didn't follow through. It didn't last, and it bounced right back. So even though I got the call right, so to speak, I still managed to lose money on it because it didn't carry on going. But it just shows again that this level is tough in breaking, and if that's the case, if it can't go down, there's only one other way it can go, and thus we've seen it run up. But even now, the bounce seems pretty weak. These series of lower highs are pretty telling now. It's going to keep the pressure on 99. I may decide to go with another break attempt if we do have a quick move back down here and another break, because I think if we get that, then it could be curtains and we see another decent leg lower. Whether we get that over the ECB, caused by the ECB or not, remains to be seen. So I'm going to be a little bit cautious. I think 99 should hold again, at least before the ECB, unless there's any big, huge news. But once we're over that hump, I think we will then get to see, are we going to stay in this malaise, or are we going to make another move either way? Kay, what's your thoughts on euro dollar here? Not much of a bounce, really.
No, I think in the bigger picture, 99 is still the level. As I've been saying and repeating, to me, that's still where the battle for parity is won or lost. It rebounded first test, break, take profit, get me out of here, move. Yeah, it's all part of the of how a big level reacts. We're also 2 days away from the ECB. As I was saying last week, on the chat as well, perhaps the first try we are not going to break, but after the ECB, the risk is probably increasing. I don't know where we are going to be in euro dollar going into the ECB, but I wouldn't be surprised if we are either close or hovering around the 99, or as we've seen actually over the past big event expectations, trading bang on parity again. That's the other possibility. Very possible that we trade just around parity going into the ECB, because I trust a few shorts in euros, still may have a few positions to manage before the outcome of the ECB. So yeah, it's I don't think we're going to be very, very far from where we are here and now, unless in the meantime something goes on in the money markets, in the yields sphere, that takes things apart. Yeah, I'm waiting for the ECB, but I would really not be surprised if we break it, whatever happens after that, unless the ECB goes 75 and signals another series of big hikes coming up. It's still, well, we can take it both ways, right? It is going to be a catch-up move, which people may see as a positive for the euro, as the rest of maybe start to slowing down. But on the other hand, the other side of the knife is that it's still only a catch-up move, and they are still far away behind especially the Fed, if you look at the size of the two blocks. So yeah, I'm keeping all my options open until the ECB right here.
Yeah, exactly. As I was saying in the chat room earlier, it's sort of fundamentally you've got no reason to buy it, neither technically, and technically you've got no reason to sell it down here against such a big level. So it's a bit of no man's land for me. So I'm pretty neutral on the euro still versus the dollar at least. A quick look at cable, because a smart bounce we've seen since yesterday's lows. You know, the thing with cable, it has got that additional volatility in it compared to euro dollar. So much like it's fallen much faster over the last few days than or a couple of weeks than euro dollar has, thus we get the bigger bounces if they happen. So, you know, we're up a decent 150 odd points, give or take, over where we were on the lows yesterday. Does it mean everything's hunky-dory for the pound? Certainly not at all. But, you know, when you look at price action, you want to see what happens. You know, is this a dead cat bounce, or is this a sign of a bottom? I want to see confirmation. If we get another move down to, you know, maybe 114, 60, 70, maybe 80 area, just as you can see, as we had the bounce up, we've come back down here to this 80 zone. If we get further support on another test down here, that would potentially signal that we are going to find some semblance of a bottom, be it short term or otherwise. As you can see from this other action here, we've made lows, we've bounced, we've broken the lows, bounced, broken the lows. You know, it's been a never-ending story of breaking the lows until we get a decent period, maybe over a course of a few days, pretty much action like we've seen in euro dollar at 99. Get a few days, a few sessions where we come down and test it and hold it. That gives you a bit of more conviction that potentially we found a bottom in play. But other than that, I still think we're just mooching around the volatility that's in these pairs against the dollar. A lot of the driver, I think, behind this move, as with the euro dollar rise this morning and other pairs, has been the yen moves. You know, looking at the crosses, you can see that they've had an effect of dragging up the majors behind them. So that's really been the theme this morning, more so than wholesale dollar weakness. It's been these yen crosses dragging everything else up behind them. One pair I want to look at quickly before I hand over to Kay is euro sterling. I was looking this morning, even just before coming on the show, I was wondering about maybe trying a very small long against this sort of 90-95 area, just to see if we held. But I didn't like the weak bounce that we got off this last test down here at the 85.90s. I haven't had any sort of conviction in this break since it's happened. Technically, it has done the job. It showed us support. Then we've bounced, but very weak bounce, and now we've had a bust down below. So I'm not ready to get on board with this yet. I still want to play it from the long side, but I want levels much better than this if I'm to do that. So we'll see what the ECB brings. Maybe if we get a move down, it's easy to say now. I'd love it down at 83s, but I doubt we're going to get there. And if we do get there, something's probably going to have changed for the negative that may show me some caution in actually getting longs. But I didn't trust, and I said this on the show, I didn't trust this move up, and we'll see what's happening there. From here, Kate, I'll let you take that one over now.
Yeah, just keep your euro sterling up there.
Yep.
I think it's what we are seeing in sterling is sell the rumor buy the fact move on Truss election, because the market knew about she was going to be a big spender, but then sub 115 on the cable, it got a bit cold, and then once she made her opening remarks yesterday, we're still expecting her full program, I reckon, for Thursday, if I'm not mistaken. But yeah, it's been a case of selling the rumor by the fact, of managing the books behind the fact. I did buy some downside on the spike that we saw up in the 86, 70s, and I'm mostly covered, and I'm not saying overly surprised that we are back at 85, 80, but once that managing the books effect is done, or would be done, I was thinking that perhaps sterling could have another retest lower. So I covered all my outstandings on that euro sterling put. I also think around here 85, 80, 85, 90s. It's a bit of a level. If it gets down there, there's not too much below. There's not too much under here before 85, the figure-ish.
Yeah.
But okay, I'll show a few things. Try to show a few different things, and then see what people have to say if they want to. Ask a few questions. Yeah. Okay. First of all, dollar yen, big move again. We've been hovering around this trend line coming in here for a while, and then now finally shot up. But it's basically, if you look at those steps, and Ryan was already showing steps in other currencies as well, it's just the way. It's just we're just going on a step higher, and for as long as the situation in Japan doesn't really change, any sort of move lower, so we could come back here to 140.70, even 140 the figure. Yeah, around 140.70 now. It's not going to change anything to the picture, not even in the short term. It's still very dangerous to step in front of this train and buy yen, in my opinion. Of course, there will be periods of consolidation, and we've seen serious ones on the way up here. But at the end of the road, or in the global picture, yen is still very, very weak, and that's everything to do with central bank divergences, what I've been saying already about the government doing a part of the Bank of Japan's job, really, in not actually Bank of Japan's job, making it more difficult even, with putting in place all those stimulus plans to try to help companies with their energy bills. So there's little that really tells me that, all right, this is going to turn around and we are going to have to start to buy yen. That's going to happen. Well, an intervention will have this kind of effect, but in current context, with the yields higher and with energy still being relatively high, there's little to say like, yeah, the yen is going to strengthen. Although this being said, and as I already said a little earlier in the show, if this $10s, if that starts to falter a little bit above 3.25%, which it looks that we might have a bit of difficulties to stay above 3.25%, we may see this setback, and that's the reason why I went out as well. I was looking at oils, I was looking at the US 10s, and I decided to get out of it also because we are having this extension here at 141.80, 82, which we went to tag, and we are getting closer to the potential target of that earlier bull flag. And also, as people are showing in our room regularly, there's a few harmonics all pointing at the 142s in dollar yen. So I'd be a bit careful here. But for it to go really lower, we need something to trigger it. And is it oil? Perhaps. Is it the US 10s capping above 3.25%? Perhaps. So for the time being, I'm being a bit cautious here. On the other ones, yeah, I mean, I'm a little involved in the Norwegian kroner, not so much in the euro and NOK, but ahead of ECB, I wouldn't be surprised if we hold around these levels here and make a move back up to 10. But with all the weight hanging around the euro's neck, it's a bit difficult to stay long for longer. The one I'm more interested in now is dollar NOK. I did buy it around 10 again end of last week. Managed to sell a few out on the way up, and then I was very lucky actually overnight because my broker, for some reason, they panicked, and I don't know what happened there really, but I got filled on a bid at 991 in dollar Norway. I've already lobbed some out around this level, but the overall average is pretty good. I want to try and defend this one for as long as it holds above 981, 983, trading it in and out. Keeping a close eye on yields, of course, because the dollar side of things is always going to be impacted by what's happening on yields. But then when I look at the oil market, and bearing in mind that the Norges Bank is selling 3.5 billion Norwegian kroner every day, I do think that there is a fair possibility for this thing to move back a bit higher. But we'll have to see. This has also been a traffic zone earlier in the year. We'll have to see if it holds this crossroad of levels and possibly get a move at least into this 10, 12, 10, 14 zone. Another one that, as you know, I'm in, we are here. It's like a map. We are here. You are here. It's this famous 697. Is one of my targets, so I did lighten up again into this zone, keeping some for the rush to 7. It may even go higher later, but I expect, and I'm also looking at the difference between where dollar CNH trades compared to where PBOC fixes the dollar CNY. Because it's like the regulated versus the free market that we used to trade back in the 1980s, 90s. it's the central bank will also keep an eye on the differential between where they fix it and where the free market, the offshore market, is trading. And as already officials were saying, it's not going to be a one way. We have to be a little bit careful when we get to big zones like this 7 should be. So I lightened up a little bit. I will try again to load them up again for as long as this zone is holding in the longer term. But if ever we get moves close to 690, I think it's going to be interesting what's happening, unless, of course, I'm saying unless the dollar yield starts to come off, but I don't think that's going to be happening very soon. Dollar makes not a lot to say, wishy-washy. We're trading around 20, the big figure. I don't think there's a lot to do around here. 2020 is where it plays ball or not, if we get back above there. And then keep an eye on what's happening around 1990 for those following. Oh, I forgot to put up the chat. Okay. I'll be looking to resell on a move back up to 20 now, depending on what's happening on the ECB. Yeah, again, whatever I'm talking now is I'm going to try to be very patient and see what's happening over the ECB, right? So we'll still have time to talk about stuff. Dollar rand came close to a very interesting zone around. Came close to a very interesting zone around the 1750. Well, it's only it's a daily chart. But anyway, this 1750 is a big area. We're coming back to rest now on this 1706. So this could be our little range going forward trading, and wait for what's happening on the US yield fronts. The rand data have been so-so, but not either to go and panic on the South African rand either. What else? Oh yeah, dollar Canada. I'm still not really very interested in it, but the Euro Canada is doing funny things. I tried yesterday to sell this one. And I moved out of it this morning on this early morning euro spike, and it's actually just crumbling away again. It does look like the market can only buy euros for a certain period of time. I see all the euro crosses are coming off right now. So yeah, this one I'm going to keep a close eye on. If I see a bit higher levels post ECB, I may get interested again. Same thing on the Euro Aussie, although the Aussie, I don't, let me take the Aussie dollar. I don't particularly like the reaction on the Aussie dollar after the RBNZ, after the RBA, sorry about that. That's dollar CAD.
Yeah, I was about to say it's dollar CAD, mate.
I thought it didn't look like Aussie dollar. Sorry about that.
Definitely doesn't look like Aussie dollar.
Yeah, so we had a spike back up into this 68 25-30 zone, and it doesn't manage to hold its ground. I'm a little worried for the Aussie dollar, to be perfectly honest. If we don't get in the upcoming sessions, if we don't get a move back above and break above the 68, call it 25-30, it is not impossible that we are going to go back for the lows here. I really wouldn't be surprised, because it's worrying me a little bit, the lack of elasticity of the Aussie dollar right now. And I'm looking at the clock. I think that's okay for today for me, unless anyone wants to talk about something. Yeah, dollar CAD is confusing, Brian. Yeah, I think, Brian, dollar CAD is confusing. It's yes and no. It's confusing because it's higher, but it's not pushing through like the rest of the dollars. But we also have to remind us that Canada, together with the MEX, for instance, are very closely tied to what's happening in the US. So if the US is the less dirty shirt around the world right now. Canada and Mex are things that usually walk a bit in its slipstream, right? Due to their proximity and their close ties. So yeah, dollar CAD may be the confusing one, but then if you look at crosses, they may be showing you a clearer picture. And with that, Mr. Ryan, I'm going to give it back to you.
Yeah, thanks, mate. Yeah, dollar CAD is a strange one. You know, it looks off the oil bus. You know, we've seen oil as we've shown take a dip, and yet dollar CAD seems to be falling a bit. So you know, the oil correlation is swinging in and out as ever. Let me grab the screen there just quickly. Yeah, as who said it there? Gavin, 130.70 looks a level to watch. Yeah, 130.70.80, 130.80 has been one that's been on my it's been a historical level going back some months this year. Definite one to watch. We have had that slight moves under down towards the 70 area. So yeah, keep an eye. 70.80 is easier, bit of a marker up here. If we get below that and hold below that, then we're going to be looking at down into the 129s or at least low 130s for a move. But overall, it's still really ranging. It is keeping its uptrend that it's been in for quite some time. So that still needs to be respected, but it's moving in tandem with all the levels and the zones and the whatnot going on. So what I just wanted to point out quickly, we have got big data coming out of the US today. ISM services numbers. We get the market services number first of all at Q3 today. Was in contraction, expected to go further in contraction. The same with the services number, expected to drop back just a touch. Will we again see US data holding up fairly well as averse to expectations? This could be yet another one that might see the euro. If it's strong data, we could get the euro back testing at 99, and if it holds again, that might be an opportunity I look at just to play the intraday ranges, maybe a long off of 99 if it holds. So that's pretty much it for today as far as that goes. As always, thank you very much for coming to the Flow Show. If you do want to come and join us on the platform, come and have a look at what we're doing. Obviously, you get to share your thoughts and ideas with us on a daily basis. You can come and speak to us all the time in there. Rather than just waiting for us to do the show here. We're always available to chat. Never a problem chatting with anyone. I've put the link there for you guys in the chat room. Come and come and say hello. And if the platform's you, then carry on, and we hope you do well then. If not, then you can disappear with our best wishes that you've at least tried it. Anyway, thanks to K-Man. Thanks to all you guys. Have a safe and prosperous day today. Stephen, you're in apparently. Yeah, well, come and say hello, mate. If I haven't seen you already, let me know what your username is if you've got a different one. And on that note, thank you, and we shall see you tomorrow.
Have a great trading day, guys.